Two down, one to go. The UAW reaching a tentative deal with Stellantis following its agreement with Ford, but the union has expanded its strike against GM. Joining us right now is former Ford CEO and CNBC contributor Mark Fields. And Mark, let's talk a little bit about this. The deal that has the tentative deal, what we know about it at this point, what we know about the two deals. Are these deals that are good for both parties, or is it going to be something that really puts some extreme pressure on the companies that are going ahead and making the deals?
Well, it's a great question, Becky. I mean, for the rank and file, it certainly is a very rich contract. And essentially what it does, if you look back over the last 10 to 12 years, it allows the workers on the line to actually recoup all the things that have happened in terms of inflation and the other economics that have gone on over the last number of years. So it's a very rich contract from their standpoint. From the automaker standpoint, I mean, the good news for Ford and for Stellantis, it gives them certainty right now in terms of what is the increase in costs in their vehicles. And they're going to have to look at this very hard, and they're going to have to look at other efficiencies to say, listen, in Ford's case, I think they mentioned that it would be between $800 and $900 per vehicle added cost because of the labor. So they're going to have to look at a lot of efficiencies. They're going to have to look at actually, automation in the plants is now going to look a lot more compelling, but it is going to influence their future investment decisions and hiring decisions. And from the UAW standpoint, the question mark for them is, ultimately, if, the measuring stick of whether this contract is successful is, do they have more members at the end of the contract? And that's going to be, an important yardstick, because for the union, it's all about membership.
Automation looks better to the companies. Do they have the freedom to put in automation, or is that something that the contract prevents them from doing?
Well, as I've read the contracts that was negotiated with Ford, it does give them that possibility. I mean, Ford has to make, as with Stellantis, they're going to make product commitments. The union now has the right to strike if the plant gets closure. That's the first time they've achieved that. But I think within the plant itself, it allows the companies the flexibility to employ more automation. And for future products, additional products that the automakers decide to add to their lineups, of course, it's going to influence those decisions, whether those products are going to be produced in the U.S. or will they produce somewhere else in North America, like Mexico. They have the flexibility to do that.
So this is a deal you would take. If you were still running Ford, you'd say, good deal, I'll go ahead with it?
Well, certainly the deal was richer, I think, than the executives at both Ford and Stellantis expected. But it is richer. But listen, at the end of the day, you had a confluence of a number of factors here, which really handcuffed the automakers. You had, obviously, a period of high inflation. You've had a period of union resurgence, if you will, in terms of support from the American public and some of the recent deals that have been done in other industries. And just as importantly, you have the automakers coming off literally a record level of profitability over the last 2 or 3 years, either, due to some of the supply chain issues, et cetera. So I think the automakers knew they were going to pay up in this contract, but it was richer than expected.
The GM deal, what's the sticking point there? Do you have any idea?
Well, as you saw, Becky, and you mentioned, obviously by the UAW striking another plant with GM, there clearly was a stalemate that was reached. And, the union felt for them to kind of get GM over the goal line, so to speak, they had to do this action. I don't have any inside information, but I would suspect that it has something to do with some of the non-wage demands that may have, related to either product commitments or the right to strike, or, the organizing of some of their EV plants. The economics, I think they're just going to, have to take what Ford has set and Stellantis has now followed. But I have a feeling it's in some of these non-wage demands.
I'm driving a Ford car right now. I've been thinking about getting a new one. Am I wrong to worry that cars that have been made in the last month or so may not be up to snuff in some way in any of the big three? If you have an angry workforce, if you have an unmotivated workforce where part of them are on strike? Does that lead to any concerns about the product that's produced?
Well, first off, Becky, I'm really glad you have a Ford. But secondly, when it comes to, buying a vehicle right now, listen, all the automakers have very good quality systems in their plants. But I also think, listen, the union workers in the plants, these are hard jobs, right? It's hard work. And I think the members on the plant floor, they take a lot of pride in their work. So I think the days of, 30, 40 years ago, workers trying to kind of sabotage vehicles that customers are going to own, I don't think that's happening on the plant floor. I think there's a lot of pride there that these workers take, and I don't think
even when they're angry and they feel like they've gotten stiffed by the companies, and some of their brethren are out on the strike lines.
Well, listen, that they're in a strike right now to get better economics, and so what they've seen coming through, these are very rich contracts. But I think on the plant floor, all the workers want to do a good job and not end up, causing problems for customers.